Good morning, everybody. We're going to let everybody sort of file in, as it were. So we'll give it just a minute before we actually start the presentation. Okay, I've got 9 o'clock straight up, so we'll go ahead and start. Good morning, everybody, and welcome to the COVID-19 and Emergency Paid Sick Leave webinar, sponsored by the Monterey County Workforce Development Board. My name is Tara Brennan, and I am the events manager here at CEA. Before we start today's webinar, I just want to go over a few details with you. Your audio is muted throughout this webinar today. If you have any questions pertaining to the presentation, please put those in the Q&A box, and Mary will be monitoring that area. For technical difficulties, please go ahead and put those in the chat box. That's where I will be, and I'll be able to help you there. There will be a quick 30-second survey at the end of this, so please do just take the time to fill that out, and you'll be put in a raffle for a Starbucks card. So now I'd like to introduce Kristen Arps from the Monterey County Workforce Development Board. Kristen?
Good morning. Thank you, Tara. On behalf of the Monterey County Workforce Development Board, I just want to welcome you all and thank you for joining us this morning. And I wanted to take a moment to say a big thank you to the California Employers Association for providing really valuable technical assistance to our Monterey County businesses, which we know is particularly helpful during these challenging times. We are really glad to be able to offer programming like this at no cost to our businesses. This is the second CEA webinar we've offered, and there will be more to come, so everyone stay tuned. And now I'm going to turn it over to Jerry, our Business Services Manager, who's going to just take a minute to tell you about our other services for Monterey County businesses. Thank you.
Thank you, Kristen. Appreciate it. Again, I'd like to also welcome you on behalf of the Monterey County Workforce Development Board. I work with the Business Services Unit of the Workforce Board, and we recognize these difficult times, and while there's some optimism, we still know that things can change. And we've been focusing on the question of business retention. We know that stabilizing businesses right now is a very important priority. What you see in front of you is a slide that shows our business services programs, and I'd like to share these with you. Our objective is really to help businesses stabilize, strengthen, and grow. And in the first column under recruitment, we have numerous services, beginning with our job and career fairs. And I'd like to point out that we're now using a virtual job and career fair platform. We've been finding a lot of success, and many of the employers who've used that like it for a number of reasons. First of all, it's a platform that wasn't available during the pandemic. And while things are now getting back to a semblance of normality, they're finding that being able to get on a platform, a virtual platform, enables them to actually reach more employees, prospective employees. One employer shared with us that they considered a huge success to the extent that they actually had the person that they hired begin work that same week. But that's something that we want to make available to you free as a Monterey County-based employer. That is available to you. We also have customized employee recruitment events. For example, we do focus on various industries. We have an online job board and other promotional activities that we provide for businesses, all of which are free to you. All our services are free. Under training, we recognize that you have some existing activities or you have existing employers. So if you have some, there's an incumbent worker training program that allows you to provide upscale training to them. On-the-job training services allows us to pay up to 50% of the training wages for new employees that don't have experience, layoff aversion for those who are contemplating having to lay off individuals. We can provide assistance with that, or hopefully see if there's alternatives to actually laying off your staff. The other services include small business grants. Right now we're in round 3 of our small business relief program, grants up to $10,000. You can find information on our website about that, where you'll be able to get more information. We have a human resource hotline. There will be a slide that shows more information about that. And if you're an employee, a small business particularly, you'll have the opportunity to ask of individuals from the California Employers Association questions. They are experts in the field, and that service is available free for you as well. We have resources and referrals for business solutions. Many employers are trying to see how they can navigate the new climate, and so there are services there. And finally, rapid response, which includes employee and employer support during the downsizing process. We work with EDD and help employees learn what resources and support they can get. So the next slide will show you my contact information. You'll be able to get information from me directly, and you'll see there at the very bottom our website address. So now I'd like to turn the stage back to Tara Brennan, and she'll take you into the program.
Jerry, thank you so much. Now I'd like to introduce our presenters, Mary Bradford and Juliana Gabriel. Mary is one of our HR directors, and Juliana is our HR compliance director. So ladies, I will let you take it away.
Thank you so much, Tara, and thank you to the Monterey County Workforce Development Board for sponsoring today. As Jerry mentioned, take advantage of that HR hotline. We're going to put the number, I believe, in the chat box for you so that you have that as a reference. So just a little bit about my company, California Employers Association. We are an HR consulting company. So we provide our members human resource compliance solutions, trainings like the one you're in today, and recruitment services. And thanks to Monterey County Workforce Development Board, you can call that hotline number and get HR advice, COVID-19 related questions. We're happy to answer that. And for our members, we have a ton of forms and policies, fact sheets available for use. And we also have some free resources available on our website under HR Answers COVID-19 resources. So make sure that you check that out. It is available to everyone. I do want to note that this presentation is for educational purposes only. It should not be relied upon as legal advice. So please consult an attorney about any issues of legal significance that may come up for you today. But we are happy to answer any questions you have regarding the content. Please direct those to the Q&A box, and Mary is going to get to as many questions as possible today. All right, so let's get started on our goals and what we're going to cover. So we are going to talk about the updates to the Family First Coronavirus Response Act. That is the federal version known as the FFCRA, and we are going to talk about how has it differed between the 2020 version last year and now 2021. Let's catch us up to date. We're also going to go over the California version known as Supplemental Paid Sick Leave, or SPSL. This is actually mandatory, and it's going to apply to employers with 26 or more employees. Then we're going to talk about the FFCRA tax credit and documentation, frequently asked questions throughout, and free resources. So let's start with some acronyms, because we hear a lot of different acronyms and they kind of get jumbled around in our head. We're, which one are we talking about? So FFCRA stands for Families First Coronavirus Response Act. This is the federal law, and spoiler alert, as of 2021, it became voluntary. So it's no longer mandatory, but there are two components. So there's emergency paid sick leave, known as EPSL, and then expanded family and medical leave, EFMLA. So again, this is no longer mandatory, but there's an incentive for employers to offer it because there is that tax credit opportunity, and it allows your employees to take COVID-related leave, and you at least get reimbursed through payroll tax credits. Then there is the California version, SPSL, not to be confused with EPSL. So SPSL refers to the 2021 California Supplemental Paid Sick Leave. This is state law, and as I mentioned, it is mandatory. As we're going to discuss, there is no tax credit opportunity under this California version, and so that's why many employers have decided to voluntarily offer FFCRA so that they can run those leaves at the same time, FFCRA and SPSL, and at least have, again, as I mentioned, the opportunity for the tax credit. Note under the California version, there is no COVID-specific family and medical leave equivalent like there is under the FFCRA. That doesn't necessarily mean that someone isn't going to be entitled to family and medical leave under the California Family Rights Act, that as of January 1, 2021, it applies to employers with 5 or more employees. So that still could apply. It's just there's no COVID-specific family and medical leave under the California version. We also have a great chart on our website. So if you go to employers.org, HR Answers COVID-19 resources, you can refer to our SPSL versus FFCRA comparison chart. We are going to be going over the differences. It can get confusing because the two are so similar, with just some slight nuances and variations, but that's a great chart to have as a reference if you're trying to remember what did we talk about in this training, how do the two differ. You can refer to that chart on our website. So let's start with FFCRA overview and update. So this is going to be the voluntary federal version that has that tax credit opportunity. So this was originally signed back in 2020 into law, and it was originally mandatory. It went into effect on March 18, 2020, and the period that it covered was April 1 to December 31, 2020. And it was mandatory for employers with less than 500 employees. They had to provide up to 2 weeks or 80 hours of emergency paid sick leave for COVID reasons, and then up to 12 weeks of EFMLA when someone had to be out due to child care or school care closures due to COVID. There was also still that reimbursement to employers for paid leave through payroll tax credit. You can go to the Department of Labor website and click on this link here regarding information on that. So why do we care now about that 2020 version that was mandatory? One issue that can come up is that you may have had an employee who went out on leave in 2020 for a qualifying FFCRA reason, but you never paid them. Maybe it went under your radar, you missed it. Is that employee still entitled to pay even though the FFCRA requirement has expired and it's no longer mandatory? All right, what do you guys think? The answer here is yes. The Department of Labor has said that it will enforce the FFCRA for leave taken or requested during that effective mandatory period from April 1 through December 30th, 2020, so long as the complaint is made within the statute of limitations. So that employee has 2 years to bring a complaint or 3 years in the case of a willful violation by the employer. And that employee may also have their own private right of action for alleged violations. So if you do believe that you missed this issue and you failed to pay someone for FFCRA leave back when it was mandatory, make sure that you consult counsel about the best way to proceed on that. All right, so where are we now with this voluntary federal version? It's been a little confusing because there's been multiple extensions of the tax credit, and so it's been a little bit difficult to track for many employers, but we're going to unpack that here for you. So required FFCRA leave, as I mentioned, ended on December 31, 2020 last year. The legislature initially extended voluntary FFCRA leave from January 1, 2021 through March 31, 2021, which basically meant that covered employers, those with less than 500 employees, could still offer it and get that tax credit. But employees were limited to that bank of initial 80 hours from 2020. So if someone already exhausted, they took 2 weeks of emergency paid sick leave, let's say back in 2020, then that employee had nothing left from January to March. It doesn't mean that other leaves of absences couldn't apply, but they just didn't have an opportunity for that federal tax credit. Then the legislature extended the tax credit again under the American Rescue Plan from April 1, 2021 through September 30th, 2021. And this time the legislature reset employees' bank of hours to 80 hours on April 1. So that means as of April 1, everybody had 80 hours available. Again, it was still voluntary, but you now have an opportunity for a tax credit even if someone exhausted those hours back in 2020 or the beginning of 2021. Again, this is separate from the mandatory California version. We are going to talk about that. But because there is this tax credit opportunity, there is an incentive for employers to offer FFCRA leave in conjunction with the California Supplemental Paid Sick Leave version. The two can typically run concurrently, so run at the same time, and you at least have an opportunity for that payroll tax credit through the federal version. Now let's talk about the covered reasons under the federal version, the FFCRA, as well as the different rates and caps. So if the employee is dealing with a COVID issue related to themselves, they are going to be paid their full rate of pay. So the number that you're going to multiply up to 80 hours is going to be that full rate of pay. So for example, if they make over the minimum wage, maybe they are paid $16 an hour, then that would be their full rate. And the covered reasons related to self are the employee is subject to a federal, state, or local quarantine or isolation order. The employee has been advised by a healthcare provider to self-quarantine, or the employee is experiencing symptoms of COVID-19 and seeking a medical diagnosis. Now, if you have those high income earners, you can cap the amount that's paid out at $511 per day. And this is really where the payroll tax credit would also be capped. That's why it's relevant now, even though it's now voluntary. That's going to be the limit on what you can recover under that payroll tax credit. If the employee is caring for another person related to COVID, then they're going to be paid 2/3 their rate of pay, again, up to 80 hours, but you're going to multiply it by 2/3 their rate, and you can cap it at $200 per day. So this is going to be when the employee is caring for an individual who is subject to an order or self-quarantine, or the employee is caring for their son or daughter if the school or child care is closed or unavailable due to COVID-19 precautions. As of April 1, under Biden's American Rescue Plan, we have some additional covered reasons that you can use voluntary FFCRA leave and still get that tax credit. And that is related to the vaccine and COVID-19 testing. So if you have an employee who is obtaining a COVID-19 vaccine or recovering from the vaccination side effects, you can pay them out at their full rate, capped at $511 per day. Or if they're seeking or awaiting the results of a COVID test or a medical diagnosis for COVID, when that employee has been exposed to COVID-19 or you as the employer has requested them to take that test or seek that diagnosis. Again, it's going to be the full rate capped at $511. So what this means now is there's a potential of 14 weeks of pay between the emergency paid sick leave and EFMLA programs. We're going to talk about EFMLA in just a minute. So now all of these covered reasons apply, again, through September 30th, 2021, unless the legislature decides to extend this tax credit again. So let's just do a review of those details. 2021 voluntary FFCRA, the tax credit opportunity is available through September 30th, 2021. And so covered employers may voluntarily pay emergency paid sick leave or emergency family medical leave and still apply for the tax credit. Effective April 1, 2021, the covered reasons were expanded related to COVID-19 testing and vaccination. Effective April 2021, EFMLA, so that's up to 12 weeks for family and medical leave related to COVID, became available for all covered reasons. So previously, if you were subject to this last year under the mandatory version, you might remember that it only applied for school and child care closures. That's no longer true. It applies for any one of these reasons that I just went over. When it is EFMLA, though, it is going to be 2/3 the rate and capped at $200 for all of the reasons, as opposed to emergency paid sick leave. You see the different rates and caps here. When it's an EFMLA, so up to 12 weeks for any one of these reasons, it's going to always be 2/3 rate capped at $200. And then, as I mentioned, effective April 1, everyone had a reset of the 80-hour emergency paid sick leave limit for all employees. So that's good news. This is more money that's now available to you in the form of a payroll tax credit. Effective April 1 under Biden's American Rescue Plan, they included some additional details. So there's now an anti-discrimination provision. So if you do decide to voluntarily offer FFCRA leave, you must apply your policy uniformly. So you can't just make distinctions based on full or part-time status or length of service or seniority. It needs to be offered to everyone. As I mentioned, California employers who are subject to the state mandatory version, supplemental paid sick leave, if you have more than 25 employees, you want to consider offering FFCRA on a voluntary basis and applying it when it applies under one of the covered reasons, because you have that opportunity for the tax credit. But what about if you're not subject to supplemental paid sick leave under that state version? Maybe you're a small employer. You still might want to consider voluntarily offering FFCRA leave due to the Cal OSHA exclusion pay requirements. So Cal OSHA says under most circumstances, when there's a work-related exposure and someone now needs to be home self-isolating under their emergency temporary standards, they require employers to maintain that person's pay and benefits while they're out of the workplace and they're home isolating and not working. Cal OSHA is not going to give you a reimbursement for this pay and benefits that you're required. So this is, again, another reason that you want to consider offering FFCRA leave on a voluntary basis. And if you do choose to offer FFCRA, there are some employers who have said, well, I just want to offer emergency paid sick leave so I can run it at the same time as the mandatory version under California, supplemental paid sick leave. California doesn't have that EFMLA counterpart, so I don't want to offer that. I don't really see any incentive to offer up to 12 weeks. And many lawyers and legal scholars have said that this is probably just fine to just choose to offer the emergency paid sick leave and not EFMLA. So consult an HR director, give us a call on the hotline if this is something that you're considering, and we can talk about those options with you. All right, now let's just jump into some additional EPSL and EFMLA specifics regarding how these leaves work. So the amount of emergency paid sick leave, as I mentioned, for your full-time employees, it's going to be up to 80 hours of EPSL, and that was reset on April 1st. For your part-time employees, they're going to receive the hours up to what they are normally scheduled to work over the course of a 2-week period. So if you have someone that's regularly scheduled to work 20 hours per work week, let's say, then they would get up to 40 hours of EPSL. So it's prorated for those part-time employees. But what about if they have a variable schedule? So maybe it's not a set number of hours per week. Maybe it's a few hours here and there. Then there are going to be different calculations depending on how long they worked for you. You can see information on that in the regulations under section 826.21, or give us a call, and HR director would be happy to assist you with that. And this 80-hour bank is supposed to be an 80 hours bank total between employers. So even if you switch employers, if you use, let's say, 40 hours with your previous employer, you would only have 40 hours left in theory. All right, now let's talk about that expanded family and medical leave for COVID reasons. So this is up to 12 weeks of leave for any of those covered reasons that I went over. And now the first 2 weeks of EFMLA are paid as of April 1. So you may have remembered that there was that gap before that pay kicked in back when it was mandatory in 2020. And so a lot of employers would first put that employee on emergency paid sick leave, and then they'd transition over to EFMLA. But now that time is paid. So what that means is that's up to a total of 14 weeks of paid leave between the EPSL and EFMLA programs. Again, when it is EFMLA, it's going to be at the 2/3 rate of pay for all of the covered reasons. And you would just use the number of hours that that employee would normally be scheduled to work for each day of the leave that an employee takes up to that 12 weeks for EFMLA. Again, the cap when it's EFMLA is at $200 a day and $12,000 in the aggregate. Also, because this is paid time, when someone is out on EFMLA, they cannot get unemployment insurance because they are still out on a paid leave and receiving that benefit. All right, when is someone eligible? So if you're familiar with FMLA or the California Family Rights Act, someone has to have worked with you for a year, put in 1250 hours of service in the past year. That's not the case for this COVID EFMLA. So here it's much broader. It's any employee who has been employed or on your payroll for at least 30 calendar days. So an example, if they request EFMLA on 4/10/2021, they must have been your employee since 3/11/2021. Again, for any of those covered reasons to apply, whether it's emergency paid sick leave or EFMLA, that person must be unable to work or telework. So this is not a situation where someone is working from home for you. They would not be eligible for either EPSL or EFMLA. It's only when they are prevented from being able to work at all due to those COVID-related reasons that I went over. All right, so frequently asked question. We have an employee who is out to care for a child whose daycare and school is open, but it's offering a hybrid model. So in-person is optional for that student to go in. Is that person eligible for FFCRA? Meaning, can you allow that person to go out on leave voluntarily under FFCRA and apply for that payroll tax credit? So the answer here is actually no. They are not eligible to take paid leave under the FFCRA because the child's school is not closed due to COVID-19 related reasons. It's optional. That person could go in if they wanted to. But in situations where the child's school is operating on an alternate day basis, so for example, the students can come in on Tuesday, Thursdays, but they need to be remote learning on Monday, Wednesday, Fridays, then that employee may be eligible to take paid leave on each day that the child's school is actually closed, so Monday, Wednesday, and Fridays. So it's really going to depend on the specific circumstances. So if you have an employee that's requesting FFCRA leave due to this reason, you want to gather some information regarding, is that school actually closed? Is it in-person attendance optional? Because that's going to determine whether you're able to get that payroll tax credit. All right, so now we are going to transition into the mandatory state version, 2021 California Supplemental Paid Sick Leave. So we're putting FFCRA and the opportunity for the tax credit aside. We're going to talk about this mandatory state version that is very, very similar. So stay with me. I do want to go over some history regarding supplemental paid sick leave because there was actually a version in 2020, but it probably wasn't on your radar unless you were a very large employer. So it was enacted back in September 2020, and it was really meant to fill in the gaps left by the FFCRA. So if we remember, the FFCRA applied to employers with less than 500 employees. So this supplemental paid sick leave covered employers with 500 or more employees, and it provided 80 hours of paid leave for 3 COVID-related reasons. That expired as of December 31, 2020. But then the legislature birthed a new version under SB 95, 2021 California Supplemental Paid Sick Leave, and this applied to way more employers. The new law applies to employers with more than 25 employees. It's mandatory. It went into effect in March. So it went into effect as of March 29, 2021. That's when compliance obligations began, but it's retroactive to January 1, 2021 and applies through September 30th, 2021. So both the voluntary FFCRA tax credit opportunity and supplemental paid sick leave obligations, right now they both end on September 30th unless they're extended. We're going to talk about, well, what does that mean if it's retroactive to January 1st and it went into effect on March 29th? We're going to talk about that. This version provides 80 hours of leave time for 2021. There is no tax credit opportunity under the California version. I do also want to mention that there are similar and expanded requirements for providers of in-home supportive services and firefighters. So if that industry if you do fall under one of those industries, you want to make sure to check out Labor Code Section 248.3 because there are some differences for you, or again, call that hotline number and we'd be happy to assist you. All right, the burning question that we get from everyone is, how do I count to 25 or more than 25, right? So you are going to include most everyone, part-time, full-time, employees on leave, temp employees, joint employees, regardless of whose payroll they're on. So maybe you have a staffing agency and they're on their payroll, but if they're working for you and they could be construed to be your joint employee, you want to count them for purposes of, am I a covered employer? Do I have 26 or more employees? And then you also want to count out of state employees. So even though this supplemental paid sick leave benefit is only going to be provided to your California employees, for purposes of determining whether you're a covered employer, you're going to count all of your employees everywhere, including out of state. Who can you keep off the list? Of course, laid off employees who have been formally terminated. They're no longer your employees, and independent contractors, assuming that they're properly classified, of course, right? Because AB5 makes it very difficult in California to have independent contractors, but assuming that they are properly classified, you do not need to count those folks. So pretty broad in determining whether this law applies to you. All right, so who's eligible? Who can take supplemental paid sick leave? As I mentioned, this is a benefit for your California employees. So even though for purposes of counting, you're counting everyone, only your California employees are going to be the ones that actually have a right to take supplemental paid sick leave. Employees are eligible for supplemental paid sick leave regardless of their length of employment or hours worked. So that means on day one of employment for you, they are eligible. So if you've brought someone on, you're onboarding them, they've been there for maybe 5 days for you, let's say, and they say, ooh, I need to take leave due to a COVID-related reason, then they are eligible for supplemental paid sick leave, whether you like it or not. So long as that employee, again, cannot work or telework for a covered reason. So if they are home teleworking and you're accommodating them in some way, but they are still able to work, then supplemental paid sick leave is not going to apply. The same thing with FFCRA, right? Unable to work or telework. So what are those covered reasons? You're going to see that they are very, very similar to the FFCRA, and that's why the two can typically run together at the same time. They come in 3 categories. So caring for yourself, caring for a family member, and we're going to talk about on the next slide, vaccine related. So if that person is subject to a quarantine or isolation period related to COVID-19, they've been advised by a healthcare provider to quarantine due to COVID-19, or they're experiencing symptoms of COVID-19 and seeking a medical diagnosis, those are all qualified reasons that you have to provide supplemental paid sick leave. Caring for a family member. So if they're caring for a family member who's subject to a quarantine or isolation period, or that family member who's been advised by a healthcare provider to quarantine due to COVID-19, or if they're caring for a child whose school or place of care is closed or unavailable due to COVID-19 being on the premises. There were a lot of questions. What does that mean due to COVID-19 being on the premises? And the DIR, California DIR, came out with frequently asked questions, and they answered what this means is that if the school closed due to COVID-19 exposure, someone testing positive, on or after January 1, 2021, then this would apply. So if that school or place of care was closed prior to January 1st, 2021, and it continued into 2021, that would not be a covered reason. It's only January 1 forward. And then that last category is vaccine related. So if the covered employee is attending a vaccine appointment or cannot work or telework due to vaccine related symptoms, this is another reason that you need to provide supplemental paid sick leave if this law applies to you as a covered employer. So question, can I deny supplemental paid sick leave if the employee does not provide a medical certification demonstrating the need for the leave? And the answer is no. So per DIR guidance, an employer cannot condition supplemental paid sick leave based on providing a medical certification. It must be granted immediately upon written or oral request. What the frequently asked questions say is that it may be reasonable in certain circumstances to ask for documentation or a medical certification before you pay for that supplemental paid sick leave. So you need to let them go out on leave immediately. But then if there are circumstances, objective reasons that have led you to question whether they truly are meeting a covered reason, then you can ask for documentation before paying out the sick leave. But the DIR says that they're going to look into the reasonableness of the employer in this situation. So the burden would probably fall on you to show that you have an objective reason. So you really want to proceed with caution. The best practice is to grant it upon written or oral request and pay that out, and do not require a medical certification.
Hey, Juliana, I thought I'd interrupt for a second and let you take a breath.
Thank
Sip
you.
of water. Thank you for so much good information. And we had a great question come in. So if an employer's protocol is to have an employee quarantine for 10 days if they're experiencing COVID-19 symptoms, would that be covered under supplemental paid sick leave?
So likely it would have to be based on an order. So some type of guidance from, let's say, Cal OSHA requiring that employee to self-isolate, some sort of agency order, quarantine order. And then if the employer is following that guidance, then it would likely qualify as supplemental paid sick leave.
Okay, and then the follow-up question, which we've had come up too, what if an employer asks an employee to quarantine after travel to certain locations? Would that be covered under SPSL?
So the answer is if it is based on current guidance. So for example, if the CDC says this is what we recommend, that you quarantine after you travel to these areas, or if you're not vaccinated or whatever their guidance says, and you're following that guidance, then it would likely again be considered an order that qualifies for supplemental paid sick leave. Do you have anything to add to that, Mary? Would you
Yeah,
agree?
I was going to say, and this is where, and I just completely feel for employers in this, and that there's so many different agencies providing guidance. We have the California Department of Public Health, the CDPH. Some of their languages suggest, they'll say something like, we suggest you quarantine. And so it does get a little wishy-washy on some of these situations. And that's why I was going to say it's a great time to call the hotline and we can check on what the current guidelines are, because I know there's been so much confusion with what the CDC is saying versus what the state of California is saying. And I know we're all kind of looking forward to this June 15th date where hopefully we're all going to be, as we like to say, symmetry and synergy, where we're all lined up together. But until that time, I would just recommend everyone kind of hang in there and, excuse me, just check your local guidance just to make sure you're being compliant with what California or even your own local county is saying versus what the feds are saying, which is everything that we hear on the national news. Sometimes we have to check a little closer to home to make sure we're being compliant with what we're supposed to do here.
Yeah, that's a really great point, is that there is right now a lack of consistency with what the CDC is saying and what Cal OSHA is saying. And so we want to always follow the California rules. So right now, they haven't lifted the mask requirement for vaccinated folks, social distancing, that's all still in place, somewhat related to supplemental paid sick leave. But yeah, we want to follow our local agency guidance first and foremost.
Thank you so much. I'll let you get back
All
to
right.
it.
Thanks, Mary. All right. So let's talk about that retroactivity requirement. So as I mentioned, even though this law went into effect in March, it is retroactive to January 1st. And so what that means is if an employee took leave for one of those covered reasons that I mentioned prior to March 29th, the employee can come and make an oral or written request to the employer for reimbursement for supplemental paid sick leave. So let's say they were out in February, they were getting vaccinated, and they took time off to do that, and it was unpaid time. You now need to pay them upon a written or oral request. Pretend as if they had gone out on supplemental paid sick leave at that time and figure out what they're owed. If they use paid time, so regular paid sick leave, PTO, or vacation, you also need to make sure that you reimburse that bank of hours. It's as if it never happened. It's as if they went on supplemental paid sick leave. When are you obligated to do this? So you must provide payment no later than the payday for the next full pay period for that time taken off between January 1st and March 28th. So what that means is if someone comes to you with a request, and let's say that you run your payroll on a Friday and it's Thursday before, and they're asking for this retroactive payment, the pay period is just the next day. You can wait until the next full pay period passes, and then that's when you're now obligated to make this retroactive payment. And again, you need to make sure, check your records. Did that employee use regular paid sick leave or vacation or PTO? Because you need to give them those hours back and make sure that their balance is reset. Now, what about if you have an employee who took time off to receive a COVID-19 vaccination back in March? This time was unpaid. Do I have to make a retroactive payment? The answer is no. You might say, I'm a little confused. You just said I have to make a retroactive payment. So in this case, unless the employee makes a verbal or written request for retroactive payment, that retroactive payment obligation does not apply. So basically what this means is you do not need to initiate retroactive payment as the employer. So you don't need to start checking your records and determining, did someone take a COVID-related leave? This retroactive obligation for pay kicks in upon an oral or written request by the employee. So you don't have to do anything with this until someone comes to you either on March 29th or after is when that kicks in. All right, so what is the amount of supplemental paid sick leave? So this law provides full-time employees with 80 hours of supplemental paid sick leave for 2021. There's no limitation on this time for firefighters. Part-time employees are eligible to the equivalent of their 2-week schedule. So same thing as FFCRAs. If they work 20 hours a week, then their 2-week schedule would be 40 hours a week. If their part-time schedule varies, they're going to be entitled to an average number of hours that they work in the preceding 6 months prior to the request. There's a tool that I'm going to point you to in a few slides that you can use if you have a part-time person with a variable schedule and you're not sure how to calculate that. For newly hired people, so people that you've hired 14 days or less, they've just started with you and they're requesting this COVID supplemental paid sick leave, and they have a variable schedule. You're really not sure what their hours are going to be. They'd be entitled to the number of hours they worked in the preceding 2 weeks before the request. So you're just going to look back 2 weeks. How many hours did they work? That's the number of supplemental paid sick leave hours that they would be entitled to. Again, you must grant SPSL immediately upon written or oral request, and there's no length of service requirement, as I mentioned. All right, let's talk about the rate of pay and caps. So for people that you designate in your handbook or policies as full-time, so maybe you define 38 hours as full-time, or for anyone that works a regular schedule of 40 hours or more per week, they are going to be considered full-time for this purpose, meaning that they get up to 80 hours of supplemental paid sick leave. Now let's talk about how we calculate what they're owed. So if they're exempt, they're going to receive their regular pay. It's going to be the same method that you use to calculate when on other paid leaves of absences. So it's pretty straightforward for your exempt salaried folks. For your non-exempt hourly, you are going to have to figure out what is the highest rate of these 3 bullet points here that I'm going to go over. And that's the number that you're going to multiply by up to 80 hours. So for each person on a case-by-case basis, you're going to look at what is the greater, what is the highest between their regular rate during the work week in which they take the leave, their total wages, not counting overtime, divided by their total hours worked in the past 90 days. So it requires you to do a little bit of math there, or the state or local minimum wage. So whichever rate is the highest out of these 3, that's the number that you're going to take and multiply by up to 80 hours. So you need to do this on a case-by-case basis every time that someone comes to you and needs to take supplemental paid sick leave, or when they're requesting that retroactive payment. The cap here is a daily cap of $511 per day for any of the reasons, and an aggregate cap of $5,110. So this is a difference from the FFCRA that we need to pay attention to. There is no 2/3 rate of pay. There is no daily cap of 200. It's always going to be the highest of this full rate, and the cap is up to $511 per day. You can't cap it any less than that. And so if you are running a leave as both SPSL and FFCRA at the same time, you always want to comply with the higher rate and the higher cap to make sure that you're compliant with supplemental paid sick leave. You can still run FFCRA at the same time, and you should, because you at least will get some or most of your money back through that payroll tax credit, but it's just not going to be up to those supplemental paid sick leave limits. There are required postings and notices for supplemental paid sick leave. So there is a poster. It can be found on our website, again, employers.org. Click on the HR Answers COVID-19 Resources tab, or you can download it directly from the DIR website. There is both an English and a Spanish version. Posters were required to be put up in the workplace by March 29th. If you didn't do that, better late than never. Go print that out and put it up now. The posters must be displayed where employees can easily read it, or for your remote workers who don't frequent the office or the company's physical location, you can send them that poster electronically. So just send them an email, or another way, put it on your website, allow them to access it. Employers must provide available leave, the leave balance in writing, including for part-time employees. So similar to regular paid sick leave under California, where there has to be the amount that's accrued provided either on the pay stub or a separate writing at the time the employee is paid, you also need to do this for supplemental paid sick leave. And the DIR has clarified that this needs to be a separate line item. So it should not be combined with regular paid sick leave. It needs to be its own item on the pay stub or on a separate writing at the time of pay. And if you do make that retroactive payment where someone comes to you and requests retroactive payment from January through March for a covered reason, you need to make sure that that retroactive payment is shown on the pay stub at the time that you pay it out. The wage statement notification regarding how much time that person had available for supplemental paid sick leave was required to be put on the pay stub on the next full pay period after March 29th, 2021. So for all of you, that's already passed, but just make sure that if it's not on your pay stub, that you work with your payroll company to get that item on there, or provide a separate writing at the time of pay with the accrued supplemental paid sick leave hours available. There is an interactive tool that you can use, as I mentioned, to calculate those part-time variable schedules, or to figure out if an employee is eligible for COVID-19 supplemental paid sick leave. This tool was created by the DIR, and it was a tool for employees to use to determine if they're eligible, but you as the employer could use that tool to figure out if someone's eligible if you're not sure if they fall under one of the covered reasons. If you do want to direct your employees to this tool, be mindful that the website also gives links to report wage claim and labor law violations, as well as how to file a retaliation claim. So just know that that is going to be available to your employees if you direct them. But you can use, as I mentioned, you can use this tool for your own purposes. It can work both ways. Now, if you have everything jumbled in your head between SPSL and FFCRA, go and refer to our comparison chart, and I will also go over the key differences right now so you can just kind of see them lined up together. So California's supplemental paid sick leave is mandatory, and it applies to employers with 26 or more employees. The federal version, FFCRA, is voluntary, and it applies to employers with less than 500 employees, meaning you can take advantage of that tax credit. There is no tax credit opportunity under the California version, but if you run it at the same time as FFCRA, then you can get that tax credit through the federal version. California version is effective from January 1st to September 30th. That's the same period for FFCRA when it became voluntary, so January 1 through September 30th. California supplemental paid sick leave up to 80 hours for 2021 from the period of January to September. Under the FFCRA, remember that bank of hours was reset to 80 hours on April 1st. So that might end up with someone taking 160 hours of FFCRA and be able to get a payroll tax credit depending on how things lined up if they took some time in January and then again in April, let's say. Under California supplemental paid sick leave, it's always going to be that full rate of pay for all of the reasons. Under FFCRA, it's 2/3 rate of pay when caring for family members related to COVID reasons. The caps. So employers can set a daily cap of $511 and an aggregate cap of $5,110, and that pertains to all the reasons. Under FFCRA, when that leave is related to the employee, then the daily cap would be the same, $511 and $5,110 in the aggregate. But when caring for a family member, the daily cap goes down to $200 and $2,000 in the aggregate. So if you are subject to supplemental paid sick leave, you must always pay the full rate of pay and the higher caps, as I mentioned, even if you are also designating the leave as FFCRA. So no matter what the reason, whether they're caring for themselves or their family member, always use that higher rate and the higher cap to make sure that you're compliant with the California version. All right, I have less than 26 employees and I'm not subject to supplemental paid sick leave. Is there any reason that I should voluntarily offer FFCRA leave? So I mentioned this back at the beginning. Maybe. Under Cal OSHA's emergency temporary standards as they currently stand, employers are required to maintain employees' pay and benefits after they're exposed to COVID-19 in the workplace, and they're required to exclude themselves from the work site. So this might, again, be a reason, even if you're not subject to supplemental paid sick leave, that you want to offer that FFCRA version. And you may also want to encourage people who are symptomatic to stay home. So even if this Cal OSHA issue isn't going to come up, this is a nice benefit that you can use. You can take advantage of that payroll tax credit and offer this paid time, because if employees don't have this paid time, then if they're symptomatic, they might be more tempted to just continue coming into work and could expose your other employees. So you want to make sure that you address this in a policy if you're going to offer it, and then designate that leave as FFCRA and apply for the tax credit. All right, so let's talk about, I want to get you guys out of here on time in the last 10 minutes or so. Let's talk about that FFCRA tax credit and what you need to do in terms of documentation to make sure that you get it. So when you are documenting EPSL, the emergency paid sick leave under the FFCRA, and you're seeking the tax credit, you should prepare a written request with the following information: the employee's name who's taking the leave, the date or the dates for which the leave is requested, a statement of which COVID-19 related reason applies, and a statement that the employee is unable to work, including telework, based on that reason. So you want to have this information in there at a minimum on the written request. We have sample written request forms, sample policies available on our website. I will talk about that at the very end where you can find those. If the leave request is based on a quarantine order or self-quarantine advice, then you should also include the name of the governmental entity ordering the quarantine or the name of the healthcare professional advising self-quarantine. And if someone's caring for someone else, you want to include the person's name and relation. So for example, if they're caring for their spouse that's dealing with a COVID issue, include the spouse's name and the relationship that's person's spouse. All right, very similar. If someone's out on that EFMLA up to 12 weeks and you want to seek a payroll tax credit for that, you're going to have the same information in the written request: the name, the dates, the COVID-related reason, and a statement by the employee certifying that they are unable to work, including telework for such reason. If the request is due to a school closing or childcare unavailability, and remember, now EFMLA applies to all of the covered reasons. It used to just be school closures and childcare closures, but you can now get it for all of the covered reasons. But let's say it is a school closure or childcare unavailability due to COVID. You also want to include information regarding the child. So the name and the age of the child, the name of the school that has closed or the place of care that's unavailable, a representation that no other person will be providing care for the child during this period. So if the other parent is caring for the child, then this is not going to apply. It needs to be one caretaker at a time. And then if the child is over 14, you also need to include a statement that special circumstances require the employee to provide care. So they're just assuming that if the child's over 14, that they're self-sufficient. I know some parents would probably disagree on this, but they're going to require that statement that there's some sort of special circumstances. You may also include a notice of the closure unavailability from your child's school or care provider. This could even be something that you download off their website, or if it was published in a newspaper or a letter emailed to you from the school, really anything documenting that closure, or if they're discussing that they're on a hybrid model and certain days of the week students won't be reporting on campus. That's great documentation. And you can use this again to make sure to obtain that tax credit. Now let's talk a little bit about how that payroll tax credit works. So employers receive 100% reimbursement for paid leave pursuant to the FFCRA. So that's great news for employers. Again, you want to take advantage of this. I do want to note that this is not necessarily 100% reimbursement of California supplemental paid sick leave expenses. The reason is because, again, as I mentioned, the California supplemental paid sick leave is always that full rate of pay, and it's always capped at that higher amount of 511. So the FFCRA might not always match up exactly, but at least you'll get most of your money back through the FFCRA payroll tax credit. It also includes qualified health plan expenses allocated to the leave wages, and employers do not face tax liability for not depositing the payroll taxes withheld. So if you want more information on that, you can visit the link here to the IRS website. So let's talk about forms. So eligible employers can claim the credits on their federal employment tax returns. So this is going to be Form 941, and it's titled Employer's Quarterly Federal Tax Return. Or if there are not sufficient payroll taxes to cover the cost of that leave that you paid, you can submit a Form 7200, which is going to be an advance payment of the employer credits due to you. And this is a new form that's available. So you want to chat with your accountant or CPA or whoever handles this for you to make sure that they are taking advantage. So just some examples just to put some real life context to this. So if you're an eligible employer and you paid $5,000 in sick leave and you're going to be required to deposit $8,000 in payroll tax credits, including taxes withheld from all your employees, you could use up to that full $5,000 to offset what you owe towards your $8,000 deposit, which means that you're going to only be required to deposit the remaining $3,000 on your next regular deposit date. Now, let's say, though, that the cost of the leave that you've paid out has exceeded your payroll tax credit obligation. So let's say that you paid $10,000 in sick leave and the FFCRA sick leave, and you're required to deposit $8,000 in payroll taxes. The employer could use the entire $8,000 of taxes in order to make qualified leave payments and then file that request for an accelerated credit of that remaining $2,000 so you can get that money back to you. So again, it is 100% reimbursement under the FFCRA. All right, I want to point you to some great free resources that you can use and take advantage of. So again, you want to go to our website, employers.org, hover over the HR answers and click on the COVID-19 resources tab. We have that SPSL versus FFCRA comparison chart, sample request forms, sample policies, and many more COVID-19 resources. If you are a member, you can refer to our COVID-19 return to work and leaves of absence toolkit, walking you through the differences between SPSL and FFCRA and how to administer those leaves. Non-members can purchase that in our store on CEA's website. So let's go over our checklists. So we are going to ensure compliance with SPSL obligations if it applies to us, if you're an employer with 26 or more employees. You also want to decide if you're going to offer FFCRA and apply for the tax credits. Better late than never. This thing ends in September, so you can still take advantage of that. Again, as I mentioned, we have draft policies for both SPSL and FFCRA on our website, as well as the request forms for COVID-19 related leave. So you can just take those, modify them as they fit your business, and then use those for COVID related requests. You want to rely on resources from all of the agencies. As Mary mentioned, they can sometimes be conflicting, and that's when you give us a call and rely on CEA. You don't have to be the expert on this stuff. So visit our website and take advantage of those free resources on our COVID-19 resources page and give us a call on the hotline. And I will turn it back over to Tara.
Thank you, Juliana. Thanks everybody for being here. Just so you know, the HRCI code is 550144 and the SHRM code is RJYM9. Also, the hotline number for any of the Monterey County businesses is 888-217-6899. So please utilize that number. We're here to help you. Thanks again for joining us. Please do take that survey. It'll take you 30 seconds and you could be entered into a contest or a raffle for a Starbucks card. If you have any questions or double check on our website for any future webinars, it's employers.org. Thank you, everybody. We really appreciate you being here. Have a great day. Take care.